Next, we have a presentation from Austral Resources with the ticker code AR1. To tell us more about their copper cathode production in Queensland, I will now hand you over to Executive Director, Dan Jauncey. Good morning, Dan.
Great to be here, Jane. Jane, thanks very much. It's great to be here today. What I want to do over the next 10 minutes is walk you through why Austral Resources is such a great asset and an investment today. When we listed on November 3rd, we didn't come to market to raise capital to build a processing facility. We've got one. We didn't raise capital to get ourselves a mine. We've got one. It's operational. These are mining currently. We didn't raise capital to buy tenements. We've got some of the best tenements Queensland certainly has to offer in far north Queensland, north of Mount Isa, in the rare metals belt. The other interesting thing with us is let me touch on the infrastructure. Interesting fact, to get a copper mine to go from permitting to producing, you're looking at around 7 years. And one of the big holdups is getting infrastructure. We've got $160 million worth of infrastructure. You'll see in this short video we've got playing here, we are producing copper today. And not a concentrate, metal. So a copper cathode in plates. As this video pans out, you'll see the sheer enormity and size of what we've got in infrastructure in this SXEW and the heap leach in the background. Another interesting thing is we've got a $150 million camp, a 150-man camp, of which I saw a report this morning that has 101 men in it as of today. Regarding Anthill, we've got 40,000 tonne of copper to come out over the next 4-year mine life. We've recently done an offtake and prepayment deal with one of the world's biggest trading houses and miners in the form of Glencore. What that looks like to us and what that really means in that prepayment, I'll discuss later as to why it's such an important cog in what we've been working on. Some of the highlights of that deal, we get a USD $70 premium above LME grade pricing. And that is, again, because of the quality of copper that we make. Anthill itself, over that 4 years, will generate north of $500 million in revenue based on today's copper pricing, or $140 to $150 million worth of revenue annually. That's just such a big opportunity. I want to touch on Anthill itself. So when we listed, our focus was entirely getting Anthill into production. Mid-November, we announced Thiess was going to be our mining contract. Mid-December, that short video you just saw there was us blowing up Anthill. On the 7th of January this year, Thiess started mining. So there's two quite big diggers here you see swinging. There's a Liebherr 9350 and 994, so a 250 tonne and 300 tonne excavator, matched with 785 and 789 diggers. This video footage you see here was taken recently. That's of our east pit, and you'll see a slide shortly that will show the east and the west. And that the other stuff in the background you can see there is the extension of this east pit. All right, so in relation to timeline for Anthill, as I mentioned, we listed in November. We're in the process of doing our crushing and agglomeration circuit, a refurbishment there. We're currently on time and on budget on that. We're looking to do run at the end of this month on some low-grade ore, just to ensure that we're a month ahead of schedule. And we're still on track to be carting our first ore, as we expected, towards the end of April. The two lines really worth noting are the third from the bottom and the bottom line. So as you can see, we are producing copper today. As that video showed, we will do, albeit not a lot of tonnage, we'll do 150 tonne of copper cathode in March. Go to the bottom line in a gross revenue sense and get fast forward to August when we're doing 1,000 tonne. That's around $14.5 to $15 million, depending on copper pricing, per month, or $500,000 a day. So we are self-funded moving forward in our exploration play And again, as I mentioned, the Glencore prepayment and offtake, I'll touch on that once we get to our exploration. This slide you can see here is of Anthill pit shells, so east and west pit shells. All are pretty colour. So I'm not a geo, but this speaks volumes in where we're at, in what we're doing, and the grades in which we're working on. Interestingly enough, the cutoff grade that we used in CSA Global modelling was $8,200 US per tonne. So today at $10,200, already we can be looking at cutbacks to extend that mine life, pulling that lower grade in to increase our mine life. This slide here, Anthill, our timing launching into record high copper prices could not be better. So we hit our first high grade ore in our pre-strip in late February, so a couple of weeks ago. That photo that you see there, that really green ore, that's about 3% copper. In fact, I've got I don't know whether you can see that on the screen, but that there is high grade ore that our CEO Steve Tambana has filled his suitcase full because he's been up on site for the last 2 weeks bolting together his exploration team and focusing on our exploration tenement package. So as far as timing goes for us, it just couldn't be better with prices hitting where they are, dovetailing into us doing our first lot of processed ore in May, leading into 1,000 tonne a month by August. This slide here is just some operational slides, photos recently taken up on site. So there's some testing, copper in the background, and some trucks being loaded at these. AR1 exploration. So our focus, so I've touched on Anthill. You know, we are a very cash positive business come August. And when you go and look at our valuation based on what we're going to produce on in a cash sense on pricing today, there's so much upside, it's not funny. And then you bolt in our exploration. So we've got a 4-pronged attack. And firstly, it's Anthill 2.0. I've got plenty of slides that I'll run through each one of our strategies moving forward. The first one's Anthill 2.0. That's our low-hanging fruit. The second part is extending our mine life within our 2,000 square kilometre tenement package, increasing our mine life in an oxide sense, from 4 years to 10, hopefully. Third point is monetizing some of our sulphides. And fourthly is JVs or sales or purchases in relation to tenements. And we are in the process of, we're currently at the table with numerous parties in JVs. This slide here is going to touch on our timeline in relation to what we are doing in exploration. And as you can see, if you go to the bottom line, which is where most people really want to look at, is how many meters we're planning on drilling. We've got drill rigs booked that are to hit Anthill in the coming weeks. So we're hoping to be starting to drill by the end of March, early April. And our first focus is on Anthill 2.0, in and around Anthill. Hence leading us to this slide. So if you have a look at the pink areas, that's our existing ore body for Anthill. The blue lines surrounding it are the east and west pits of Anthill. I don't know whether you can see the scattered blue dots within that pink zone. They're the drill holes that we're proving up Anthill. The really exciting things for us are those areas to the northwest, to the west, to the south. There's been little or no drilling done. Now, keeping in mind that, we've got 5 existing pits of oxides, keep in mind there's been little to no drilling outside of those zones. Our next slide will really cement why this excites Steve Tambana so much. This slide here is talking about the structure in relation to our geophysics and where the corridors are that we're going to be targeting moving forward. So with reprocessing data and firing up drill rigs, our first port of call is to that northwest, where I mentioned there was very, very little drilling. The other thing of interest is that look at the scale, that's within 5 kilometres of Anthill. That for us is our first port of call. Phase two, I mentioned that we've got 2,000 square kilometres of tenements in absolute God's country for rare metals. We've got 38 target areas, all of which are within a 30-kilometre radius of our processing facility. Now that in itself is a really exciting prospect. Now I mentioned at the start of the presentation, why were we so focused on getting this prepayment deal done with Glencore? Is that as much as we are cash positive as a business come August, September, October, what means that this prepayment we can pull forward and not only start our exploration today, but we can run them concurrently. As in we can focus on Anthill 2.0, we can focus on these other extended areas, and we can also focus on our sulphide play. So that's why it's super important that we've got our hands on that prepayment. Sulphides. We've got a really large body of sulphides of 330,000 tonne. And our next focus is on how do we monetize that? How do we turn that into dollars and cents? There's some really interesting technology that I can't disclose on who we're chatting to, but they're focusing on using our existing facility to process sulphides. Now keep in mind, we're an oxide processing facility. There is technology there, and everything is lining up, especially in a test sense. That's what we're working on currently. The other fact to that is in our existing pits that have already been mined, of which there's 5 of, the owners prior to us, every time they hit sulphides, they stop drilling. So we could have a lot larger body of sulphides than we already realised. So that's our third strategy. Our fourth strategy is working with certain entities that are interested in JVing in some of our tenement package. I mentioned that we've got 4 different deals at the table currently that is looking at all the opportunities on how can we turn some of our tenure that is not necessarily where we want to be delivering today, how can we turn that into dollars and cents? And there's some really good opportunities with that. There's also in and around us a lot of juniors that we want to start focusing and looking at opportunities to be tolling arrangements, considering our processing facility has more volume than we can handle currently. A quick touch on our board. I just want to make quick mention that we're a very hands-on organisation. Shane O'Connell, our COO, has been up on site for the last 4 to 6 weeks, entirely focused on operations in Anthill, ensuring that is just ticking along really well. I said earlier that Steve Tambanis, our CEO, who's very focused on our exploration, he just spent the last 2 weeks working with his new team on pulling together where to from here. So it's a really tight-knit, very, very focused on operations board. I guess the takeaways are that we are a producing copper mine. That's very rare here in Australia. And not, I guess if you look at those volumes, the fact that we can be doing $140 million per year for the next 4 years minimum is a really good place to be starting. You know, we've had 2 organisations do research notes on us thus far, and both of them have, on where we're trading today, one put a valuation 3 times where we're at, the other is closer to 4 times. And again, that valuation is based predominantly and entirely on Anthill. So that's part 1. Part 2, the fact that we're self-funded in our exploration, we don't have to come back to market to raise capital. We have, moving forward, a very good cash balance, and our focus entirely on extending that oxide mine life, part 1. Following that, we also want to run, as I mentioned concurrently, our sulphide potential. Really look at extending that. We've also got, I mentioned that we've got such a great tenement package in such a rare metals haven. We've got so many of the big boys in and around us already having done it before or currently doing it. And the other thing that's quite unique is that we are a pure copper play. We're producing our own metal, and we've already got a partner that has signed up to take all that metal moving forward. thanks very much for listening to our story.
So Dan, we've had a few questions come through. I'll just jump into it. So the spot copper price has been performing quite well recently, but this hasn't been reflected in the movements of the AR1 share price. So what do you think the reason for the downward trend has been over the past month?
That's a great question, Joan. I guess from the time we listed, we've told a story, and that is our focus has been entirely on getting Anthill to production, and you can only be measured on your deliverables. So where we sit today, you know, we said that we wanted to be doing a blast. We said we wanted to get mining, we wanted to get producing, and we're right there. So at the end of the day, I guess our focus has been primarily on that. I guess moving forward, you know, the real upside's our exploration. The other part of that too, I don't doubt that some of the bigger institutions may have thought, you know, they wanted to wait for us to de-risk in the sense of getting operational, getting producing. Well, we're right there, and it makes our valuation today just such a cheap investment. And again, I mentioned the two parties that have done our research notes, they haven't looked at anything outside of what Anthill's going to do in a cash sense, and we're still hellishly undervalued with where we sit. So with what we've got with our exploration and the team that we now have that's entirely focused on exploration, the fact that we've done a prepayment deal with one of the world's biggest traders and miners, I mean, that the fact is that they're partnering with you, that has to say that, you know, they must think that we're on the right track.
Well, thank you for joining us today, Dan. We look forward to hearing further updates.
Thanks, Jane. Good to chat.